Let's talk some tech. Also, good morning for what looks to be a strong session for the Mag 7. Jenny Horn, host of Next Gen with me here in the studio. All right, let's talk Apple. There's a note out this morning. A tactical outperform. Tactical, that means it's fast and maybe do it right now, right?
I guess so. Evercore ISI with that tactical outperform rating keeps an outperform rating, though, $250 price target, saying they believe they're continuing to emerge as one of these leaders in strength in wearables and services. They also do say for the March quarter, they expect now a stronger for longer iPhone cycle that could drive this note of seasonality. They do mention an important component to Apple, which is China right now, because they did say that still does remain a pretty substantial risk and a key wild card. There's also been some concern around data relating to iPhone weakness within the region, which they actually believe could then lower expectations, and then any degree of an uptick in guide could be hugely positive. That's basically, though, betting on the fact that the market continues to sell Apple, and then we price in lowered expectations and then beat that, which I think is a strange strategy. But Apple did lose, I believe it was yesterday we talked about, they lose the crown as the best-selling iPhone in China. That's happened before, though. Best-selling phone in China. And I feel like that fluctuates.
Well, yesterday they got hammered, too. So I'm glad you mentioned that note, because this was a big blight on the market yesterday, down 4%. Which is not something that happens normally for Apple, especially when the market's not doing something dramatic in the meantime. So this was very Apple specific yesterday. I mean, Tesla was also a little bit soft, and Nvidia too, but Apple really got hammered on that note. So if this note can do the opposite, I mean, I don't know, maybe Apple's just kind of more volatile than usual right now.
I do feel like we've seen that in the last couple of months. I mean, I guess that's been true for a lot of these tech names, but so much of their expectations for this super cycle, the iPhone 16, was so pulled forward following really WWDC. You can trace it back to the momentum we've seen, and that has been unprecedented. We were making the argument that the iPhone 16 is this really going to be a super cycle when you didn't have the initial technology with the preliminary rollout. That was strange to me. And now feedback over the iPhone 16 to me has seemed very mixed, when people are saying this actually isn't going to be even better performing than the 15. I mean, I think that this upcoming report from them, financially speaking, is going to be huge. We'll finally get a mostly full cycle of the iPhone 16. But still, I think that there's a degree of you hope for a strong holiday season, you hope for this recovery of electronics, you hope for more and more of their high margin businesses to grow. But all of this is expectations. We don't actually know any of this has changed yet. Yeah.
So I think that kind of changes Apple as being the more reliable rock, the pillar, the kind of safety trade of tech maybe, because we've got valuations as elevated as they are in anticipation, all that stuff. I think that's why you can make moves from 220 to 250 and then back to 220 in a couple of weeks.
It's like the Tesla trade now is Apple.
Yeah, kind of, yeah. I mean, if that's what happens, the more expensive you get, the less tethered you are to your anchor, your earnings, then the more you're going to swing. So the market was able to digest that yesterday. So I think if we just avoid another Apple 4% down day, then we should be in much better shape. And hopefully this note will do enough to keep the shares afloat. Because it's a pretty positive note.
It is, and I think that it acknowledges even some of the weakness we could still see in China, but any degree of perhaps performing outside those expectations, I think could be a catalyst, which I agree in that sense. Right now, it does feel like we're so critical of every news coming out of China, whether it's regarding a Tesla, an Apple, an Nvidia, and I get why, because we're right now in somewhat of a question mark period as far as leadership and what that looks like. But hopefully we get more answers in the coming weeks as far as our relationship as the country goes with China.
Okay, so that comes to the other story, which is more policy for the social media companies. How much is the TikTok possibility real that it's going to get shut down or prevent new users? Because TikTok said if the new users aren't available, then we're just going to shut the thing down for you guys in the U.S. At least that was one of the reports I saw. Is this going to actually happen?
So there's the thinking that right now many reports have come out and said nothing confirmed, but I think that you could pretty solidly say that we're expecting some decision today regarding what will happen on Sunday. Right now, looking to lean. I mean, it looks like we're going to see a ban. What that ban looks like does still remain up to not only authorities but also ByteDance, because, like you said, I think what really grabbed the attention of the community of TikTok was there was the thinking that for a while we were just going to see apps basically be prohibited from having this on their app store. Now it's going to be, I think, entirely dark on Sunday from reports. And that's when people started to be really taking this seriously. I think that this has been serious for months. It's the most bipartisan thing that's happened in the U.S. government, I think, that I can recall. But I think that the main impact is you look at actually TikTok's numbers from like a ByteDance standpoint. If they're going to sell, of course, to us, we make up right now 20% of their global users, the U.S., 25% of their revenue last year. So sure, that's substantial, but we're not the dominant force. I mean, that's
really, it's wild.
20% is relatively small. And I was just curious, like, anecdotally, I've never done more research on something that I've never been on TikTok, so it doesn't impact me personally at all. But in 2023, since we have the full illustration of GDP, we saw that they made around $24 billion in terms of like the U.S. economy, which, mind you, $27 trillion was the 2023 GDP. So that's like 0.08% of the U.S. economy. So no, this will not have any economic impact. And I see those making that argument ridiculous.
Man, just savage takedown of the meme-fluencers by Jenny Horn there.
I hate the misinformation on the economy.
Doesn't matter. TikTokers, no matter how cute your little dances are, how funny your videos are, how silly your nonsense, you make up a fraction of our spending power. Jenny Horn wants you to know it.
I do want you to know it. Even the small businesses that have generated...
You gotta give it credit, though. Like, even though I think it's the social media app or like the content app that like you can't avoid, like even not even being on it. It's like, you know, you see it everywhere because they embed the videos into everything.
You know what I really hate though? When people send you one, you can't just open it. It makes you like go through then the app populates, then it's like, get a TikTok. And I'm like, no.
That's where I feel like you just see the embedded videos everywhere, like on X and stuff. So
yeah, you're right. It is everywhere. I wouldn't be the maddest if it went away. I hope that to make everyone happy, sure. But I just think it's amazing, the bipartisan support. Now, Trump has said he could be a friend to the app. We'll have to see, obviously. Big expectations for next week regarding Trump and what he does for so many sectors of the economy.
Yeah, true. All right, TikTok, the first of many. Thanks. Good stuff. Funny there on TikTok. And an important note on Apple.